Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. Now, historically, the second quarter, that has always been considered one of the most lucrative periods of the year for commodity traders. So far, that trend, it is definitely living up to expectations. Traders, they're pumping money into commodities at one of the fastest paces on record since the 2008 financial crisis to capitalize on the biggest macro themes that are driving the markets right now, from central bank policy failure to re-accelerating inflation to a full-blown global credit crunch. And just in case that wasn't exciting enough, traders, they're now on the cusp of being gifted with even more lucrative money-making opportunities with a global recession on the way, which may ultimately lead to the most hotly anticipated event of all, a Fed policy pivot. This cocktail of events is whipping up an explosive money-making storm that is sending commodities across the board, from the metals to the energies to agriculture, skyrocketing to record highs. Since the beginning of the year, commodity prices across the board, they have been on an absolute tear, firmly positioning themselves as one of the best performing asset classes of 2023. The great news is this trend is here to stay and set to continue throughout the year, making commodities one of the most lucrative and must-have asset classes in every portfolio. It's no surprise that gold is everyone's favorite trader when terms like crisis, credit crunch, and recession start to dominate the headlines. And full credit to gold, because it's doing what a safe haven asset should be doing during times of economic uncertainty by retaining value and delivering high returns. However, there's also another precious metal which is quietly outperforming gold this year. That is platinum. On Friday, platinum prices, they surged above $1,150 per ounce, reaching their highest level for the year so far. Since the beginning of April, platinum prices, they're up almost 15%, bringing its quarterly gain to just under 24%. That's platinum's biggest quarterly increase since the first quarter of 2008. And the rally might not stop there. According to economists, platinum is one of the most undervalued metals on Earth right now and presents significant upside potential compared to its peers. If gold prices, if they're going to 2,500 an ounce and silver is going to $30 an ounce, then platinum prices, they could surge another 60 to 70% from the current levels right now. Whilst the metals are getting all the attention at the moment, one of the best kept secrets in the commodities is also agriculture. Unlike other commodities, the world cannot function or survive without agriculture, and regardless of whether the economy is in a recession or booming, people, they still have to eat, making agriculture both recession proof and crisis proof. And this unique feature has also positioned agriculture as one of the hottest asset classes of the current economic climate that we find ourselves in right now. Unprecedented demand for safety, diversification, and also high returns during this period of economic uncertainty, that has sent orange juice, coffee, and cocoa prices surging to their highest levels. Meanwhile, sugar prices, they've also quadrupled and setting new record highs almost every month. Last week, sugar prices, they soared to their highest since 2011, tallying up an impressive gain of over 150% from the 2020 lows. According to the World Bank, agricultural commodities, they could surge another 240% from the current levels and remain elevated well into 2026. Whichever way you look at it right now, there's really nothing historical you can point to for what is going on in the commodity markets right now. The current macroeconomic backdrop, that is fueling one of the greatest wealth transfers we have ever seen. Right now, we're seeing commodities, they're tallying up spectacular double-digit gains of 10% or higher in a single week, sometimes in a single day. So just think about that for a second. In today's inflation-adjusted terms, your money sat in the bank will not even earn that return in a year or even 5 years from now. That's why it's no surprise that banks, they're struggling to retain deposits. Logically, it makes no sense why anyone would want to leave their capital sat in the bank on a 0% interest rate while simultaneously allowing inflation to devalue their purchasing power when they can achieve weekly returns of 10% or higher by actively managing their wealth through trading. The recent flight to safety, that has also seen depositors, they've withdrawn a total of $508 billion from the banks across the world in the last quarter alone. Put another way, that's $500 billion that has already left banks. Last time we saw outflows of this sort of scale was during the 2008 global financial crisis and more recently the pandemic in 2020. Both of these occasions, they led to two of the greatest bull runs in history for the commodity markets. Once again, we're starting to see the telltale signs that indicate we could be on the verge of yet another record-breaking bull market for commodities in 2023 and beyond. Right now, we have crisis on top of crisis, and as traders know, that translates to opportunity on top of opportunity. This is the time that traders they wait decades for, because it's times like these that make millionaires and billionaires out of regular people. There's a lot of traders out there. They completely missed out on two of the previous greatest wealth transfers in history, including the global financial crisis in 2008 and more recently the pandemic in 2020. The ones that saw the opportunity knew how to capitalize. They accumulated life-changing wealth. But once again, we find ourselves at the forefront of one of the biggest wealth creation opportunities of all time. The explosive cocktail of events that is currently unfolding now presents a third greatest wealth transfer of our lifetimes. According to Bloomberg, 1 in 2 people they've now turned to trading to protect their hard-earned wealth from devaluation, whilst also capitalizing on the high returns on offer in this new economic climate that we find ourselves in right now. More millionaires and billionaires, they will be made this time round than ever before. The only question is, will you be one of them? Do not underestimate what you can achieve in the next 1 month, 3 months, 6 months, and even 12 months from now. Right now, at the Gold and Silver Club, we're consistently banking over 10,000 points profit per month, which we've been transparently documenting through our weekly videos. If you're trading at one lot, that's $100,000, and if you're trading at 10 lots, that's $1 million. The majority of our clients at the Gold and Silver Club are utilizing our proprietary research-driven trading approach. They've already made in excess of 6 and 7 figures, and we're only in April. 2023 is going to be a record-shattering year for commodities, and these past few months, that's only the taster of what is yet to come. If you want to take advantage of these extraordinary markets and huge money-making opportunities on offer, there's no better time than now. Just go to jointhegoldensilverclub.com now to learn how our mentorship program can take your trading to the next level. Time is the most valuable commodity that we have. Make sure that you don't waste it. So with that, let's move over to the charts and we'll talk you through exactly what we're looking at here as we head into next week. First thing to be aware of is, as predicted and as expected, gold prices, they essentially tanked in the last week. We saw a 1% pullback to the downside there on Friday. We've now clearly broken back below $2,000 per ounce. So we're seeing the outflows that we had discussed with you on both of the last weekly reports as well, where we've seen commercial positioning start to sell heavily into gold. It's been the same with the bullion banks, whereas what we've tended to see is the hedge funds and money managers and retail, they've been the bag holders here, buying gold at 1 year highs above $2,040, $2,050 per ounce, only to then get rugged essentially, as we've seen the price break down now almost 1,000 points from high to low just in the last week and a half. So this was all to be expected. We talked you through this in detail. Now, another point to bear in mind as we go into next week, given that oil's had the same move, we very much anticipated this with you as well. We talked you through it, the potential for oil to break down, start filling the gap. Our expectation was that oil would initially, you'd get that breakout, which would essentially, it would stop out any traders that start to try to sell short to fill this gap too early, too prematurely. You would then break out with a bull trap, which traps a lot of liquidity here. You stop out new sellers in the market who are trying to fill the gap. You also trigger new longs in the market, hence hedge funds and money managers. 90% they flipped long in the last week. They're buying at the top, so they bought at the highest level in 4 months, only to then see oil prices, they're broken down 630 points just last week, a 5.6% breakdown to the downside. And as a result, yet again, we've seen more commercials. They've started to sell more heavily into crude oil. Hedge funds and managers, they're basically like gold. They're bag holding at the top of the move here. They're bought in way too late after we've already seen a 2,000 point breakout from low to high here. As you know, at the Gold and Silver Club, we banked a windfall amount of profit with our clients at the Gold and Silver Club during this whole breakout to the upside that we had over April for 13,000 points profit, which was a windfall amount of profit. A lot of that we were gifted with a huge gap higher off the back of a Sunday open where OPEC delivered a surprise output cut. But after that, when many traders had missed the move, this is where they started to FOMO in and get in too late. And then basically we're seeing the same that we're seeing on gold, this normal pullback that you get towards the end of April as well. We can see that all within the positional data as well. We're starting to see that all started to flip on the sell side, whereas retail, hedge funds and money managers as well. And also you're seeing that from funds. They were all buying too late in the move, getting a lot of FOMO. As a result, we've seen the pullback that we were anticipating. What should you be aware of now as you move into next week? Well, be aware that it's the end of the month. So normally at the end of April, end of the month, before you move into May, you're going to see further profit taking. So if you do have a market like gold, in multiple currencies, it's broken out to record highs over April. So in euros, Australian dollars, British pounds, we broke out to 1 year highs based in US dollars. You're going to very likely see further profit taking in the very last trade trading week of April, and then often May can be more of a risk-off month as well. So ideally, I'm looking for the potential for the dollar to pick up a bit of momentum here as we go into next week and see a bit more further pressure to the downside. I'd see this as nothing more than a great opportunity if we get a further dip here on the metals that then accumulate at lower prices as we go towards the end of the month and then into May as well. What I mentioned to you last week is a lot of retail got very excited by the fact that we had a dip back below $2,000 per ounce, and we're very ready and willing to get back in to the move on such a shallow move here and retracement. What I'd suggested is that it won't be shallow, it will be deeper. So it will be deep enough to basically stop out all of the traders who've just recently bought in. Most of the retail market, they're not going to be able to withstand this sort of a sell-off that we've seen over the last few sessions here on gold. They're all going to start getting liquidated. If you do see further price action to the downside, that would liquidate more traders, and then you get the bigger move as you then come back down to areas of liquidity which are much more attractive for traders to start building out larger positions. It's also similar with silver. So silver, as you know, we hit our profit target automatically at $25.40 per ounce. That was a 530 point breakout for us in 4 weeks, so really immense move there. We're already below those levels at the moment. For me, silver does look vulnerable as we go into next week. It's everything I've been talking you through. Expectation is for gold, oil, silver, all of them to pull back as you get towards the end of the month. Commercials, they've also started to sell more heavily into this market. Again, hedge funds and money managers, they've all bought really late into this move here with silver. It's the same with the retail market. After seeing a 25% breakout now within the last 4.5, 5 weeks, taking the price action from the swing lows all the way back up almost towards $26 per ounce. Now we're starting to see the potential for a lot of traders who bought in too late then getting taken out of those positions. You can see we're rolling over back at $25 per ounce. GDX, which is basically the gold miners, is now finally also starting to break down, which is another cue here that we might start to see further pressure to the downside here for gold. So that would be my expectation going into next week. Very last trading days of the month of April, that we could see further profit taking, further liquidations, because so many traders have just bought the top here. They're basically going to be bag holding, essentially buying gold way too high. If you look at it or you trade it any length of time, you'll know that these prices, buying gold at 1 year highs, is not a great strategy. You want to be buying it when there's more fear in the market, when there's been plenty of opportunities back down towards the 1800. We're banging the drum throughout the whole of December. Like, gold was a massive buy opportunity underneath 1800. Yet again, that was the case back at the 1600s in September, October last year. It was the case also back in March, where we were breaking back down towards 1830, 1820, 1815. But at $2,000 per ounce, if you've not had a position on that whole time, then you end up FOMOing and buying gold at $2,000 per ounce, just as commercials and bullion banks are really dumping hard into this market. It's going to be a challenge for you to hold onto that position. And then finally, just moving it over to another opportunity that I just put on your radar that we're keeping a very close eye on right now, and that's actually natural gas. So we've seen natural gas basing over the last really 2 to 3 months here, and we keep finding support around the 2 handle at the moment. You can see we closed at 2.2. We had a 1.7% breakout later on in the day on Friday. In fact, last week at the beginning of the week, we had an 8% breakout to the upside. This is a market which typically does tend to do well as you move towards the end of April and into May. We've started to form a base here. It's taken about 3 months to really start to base out on this market, but I would definitely say natural gas is one of those markets you want to have on your radar between now, end of the month, and moving into May. Historically, these cycles this time of year does tend to be more supportive for natural gas, and we have broken all the way back down towards the swing lows, so we're back down around the 2 level at the moment. So I'll definitely have that on the radar going to next week as well. And then just finally with crude oil, if we do get further selling pressure to the downside between now and the end of April, beginning of May as well, ideally I'm looking for a retest back down towards the swing lows that were tested over the course of January and also in December as well. These were the zones where typically you're going to see support come in. And I mentioned it previously, the traders who bought in too high here, likely the area or path of max pain is going to be for them all to get liquidated. So a more severe pullback to the downside, and then once they've all been liquidated and their positions have been neutralized, then you can see a lot of buying come back into this market. So it may not be enough just to come down and fill the gap here that was created from OPEC. We may actually have to drive even lower and come back down and retest these lows here from back in middle of January and also back in December. And that was the case also from the end of February as well. And then that potentially might offer some fantastic opportunities there to be buying in once we transition into the month of May. As you know, whatever long-term goal you're looking to achieve through trading, whether that is to create a full-time income or a second or replacement income, or just to earn a better return on your savings, now is the time to take action to really give yourself the gift of a better 2023. If you want to maximize your money-making potential and thrive, not just survive in these fast-moving markets, you need to adapt your strategy to the current market conditions. Most importantly, utilize a professional, research-driven approach. One of the biggest obstacles obstacles that hold back 99% of retail traders from achieving their desired success. It's not having access to the correct professional strategies, institutional level data, and market intelligence to make confident decisions with accuracy and certainty. Yeah? There's a huge gap between the top 1% of professional traders and the bottom 99% of misguided retail traders who simply rely on outdated technical analysis and gimmicky technical indicators that don't work in these markets. If you want to get yourself out of the bottom 99% and into the top 1% who are actually crushing it and making 6, 7, and 8-figure returns in these markets right now, then you need to utilize a professional research-driven approach, or you'll just end up wasting lots of time, money, and effort, and you'll have no results to show for all of your hard work. In these rapidly changing markets, you need to be constantly innovating and evolving. Technical analysis and outdated technical indicators, they won't work. Those days, they're long gone. If that's all you're relying on, the odds are already stacked up massively against you. If you want to change your results, you have to change your thinking. If you want to learn our exclusive research-driven approach that is never taught to retail traders and only reserved for professional traders in the banks, hedge funds, with access to powerful game-changing insights, including where banks and hedge funds are buying and selling in real time, the key liquidity zones you can enter and exit the market with pinpoint precision, the fundamentals, the macroeconomics, the capital flows, the daily, weekly, monthly, and quarterly real-time data-driven cycles, the intermarket correlations, then you need to join our mentorship program. As we head into a new year, we are in one of the greatest eras of wealth creation that we've ever seen. If you want to successfully capitalize on the huge money-making opportunities ahead and build significant life-changing wealth, there's no better time than right now. If you want to upgrade your income, then you have to upgrade your skills. Never underestimate what you can achieve in the next few months from now with the right guidance and mentorship. Time is the most valuable commodity that we have. Make sure that you don't waste it. If you want to join our community of successful traders and take your trading to the next level, there is an opportunity for you to do so. As a member, you get access to our exclusive live trading room webinars. You get access to real-time trade ideas, access to institutional research and market intelligence, access to our private Members Academy website, and also support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description, so just click on the link, make an application, and we will of course get in touch with you ASAP.